Good afternoon. Well, last week was actually a comparatively calm one for equity markets. Markets were actually down a percent or two. This follows obviously the very sharp rally we had over the previous month when markets gained around 25%. But I don't think you should be fooled by the comparative tranquility of the last week or so. The fact of the matter is that there is this, as it were, big tug of war going on between, I think, two very big forces on opposing sides. The first force we're talking about is essentially the massive fiscal and monetary stimulus which the authorities have now put in place. This chart actually shows you Federal Reserve in the States, its holdings of bonds, and what you can see is that these have climbed sharply in the last month or two. Essentially, the Federal Reserve has been injecting a ton of liquidity into the markets, and it's not only just the Fed, it's been the ECB, the European Central Bank, the Bank of England, and also the Bank of Japan. Last week, actually, or this morning to be more accurate, the Bank of Japan increased its pledge to inject money into the markets. So massive monetary stimulus. Also on the fiscal side, you've had big stimulus measures being taken and further action again last week from the Eurozone. The European authorities finalised a package of about 540 billion euros. And in the States, Congress agreed to a further package of support measures to support small business. So massive fiscal and monetary stimulus. But on the other side, you've got another massive force, as it were, in the opposite direction, and that is the fact that we are basically staring at, arguably, a bigger recession than in the global financial crisis. And we're now starting to, as it were, get some of the data showing the extent of the decline which you are seeing in these economies coming through. And we had a couple of bits out last week, probably most startling, with global business confidence. We had the numbers for business confidence for the US, Eurozone, and the UK, and essentially it fell off a cliff in April and is now down to levels way below those you saw in the global financial crisis. Just to give you a couple of other illustrations of the size of the shock we're seeing, initial unemployment claims. Unemployment claims in the US are up around 25 million in the last month, and what that means is that the entire gains in employment since the global financial crisis have been wiped out in the space of a month. And then finally, we had retail sales numbers for March, both in the UK and the US, and they saw record declines, even though the lockdowns hadn't actually gone into full effect until sort of midway through the month. So the April retail sales numbers are going to be worse still, yet even the March numbers saw record declines. So we are seeing a very sharp decline in confidence, and this will feed through to activity, and this is why this recession is undoubtedly going to be very deep. One other sort of startling bit of economic news last week, and partly I put this chart in because I'm sure in my lifetime I won't ever be able to replicate it, and that is the fact that oil prices dived into negative territory for the first time ever last week. And what that meant is that people taking delivery of oil, rather than having to pay for the oil, they were actually being paid to take delivery of oil. Unprecedented. Sure, our oil prices have bounced back a bit, but this does just really, I think, highlight the extent of the hit to the global economy and indeed oil demand that you are seeing at the moment. So two very big forces, as it were, fighting it off at the moment. Monetary and fiscal stimulus on one side, big recession on the other. And the way the markets seem to be looking at it is that essentially the authorities will win the day. Sure, it's going to be a deep recession, but essentially things will bounce back fairly quickly. Or certainly that's what the 25% bounce in markets you've seen in the last month would suggest. We're more hesitant on this front, just because, in a way, some of it's out of control of the authorities. Sure, they can do what they can, and they are doing what they can, but at the end of the day, exactly what happens in terms of how sustainably these lockdowns can be eased, it's all down to the virus. Do we get a second spike in infections or not? Previous pandemics, quite often you have. It's also down to the scientists. Do we get a vaccine? when do we get a vaccine? It looks pretty unlikely we're going to get a vaccine anytime soon, probably if we're lucky next year. And then in terms of treatments, obviously some people are talking about disinfectants, some talking about light treatment, but on a more serious front, even the more serious treatments which have been, or drugs which are being investigated at the moment, those actually last week proved to be quite disappointing. So a lot of uncertainty in terms of developing, or the timescale for developing effective treatments, or indeed developing a vaccine. So there is still, I think, a lot of uncertainty out there, and this makes us somewhat hesitant at the moment, given the size of the recovery market we've seen in the last month or so. I guess essentially what we're saying is, given these massive uncertainties, we do not think at the moment it's a time to take a big position one way or the other. One thing we did actually do last week was scale back somewhat our holdings of small and mid-cap equities in the UK, just because rather than looking at obviously a pickup in growth in the UK, which is the case of 2 or 3 months ago, we're now looking at a sort of serious recession, and that will clearly hit small and mid-cap equities in the UK rather more than large cap. But at the end of the day, we have not got a big position one way or the other. And essentially, if we do get markets falling back in the next few weeks, which we think there's a good chance they will do, we will be looking to reinvest that cash we've got at the moment. That's certainly our plan. But I have to say, given the enormous uncertainty at the moment, plans do change. So anyway, more on what we're planning to do next week. But that's about it for now. So thank you.